You're listening to QSBS Solved, where we share insights for founders and investors looking to maximize their business's growth, exit opportunities, and tax savings. Our team at QSBSrollover.com offers specialized services to help you benefit from owning qualified small business stock. Our podcast guests are leaders in their respective fields and work on every side of the startup journey to help founders and investors win. The ideas and opinions shared here are not investment, tax, or legal advice. Reach out and we'd be happy to connect you with a qualified advisor or tax counsel. For now, enjoy today's episode. Hey everyone, welcome back to another episode of QSBS Solved. My name is Brady. I am glad to be joined in studio by my partner and friend, Nick King, who is the CEO of QSBSrollover.com. We've been back and forth on podcasts a lot over the years, Nick. I'm glad to have you back on QSBS Solved.
Yes, sir. Originally started as a Clubhouse room, actually, back when Clubhouse was a thing, but excited to be on QSBS Solved.
Yeah, we were QSBS Solved, and QSBS was never talked about on Clubhouse, but the last company that you started, Vint, we did start in the early days on Clubhouse, throwing around ideas, and that was actually really how we first started to get to know each other. That's about 5 years ago now, right?
Indeed. Yes. Probably a little over 5 years ago. And that was probably right around the time I was also learning what QSBS was.
Yeah, that's kind of what some of the conversation we're going to try and have today for folks. And hopefully founders listening to this or even advisors listening to this can get some good insights about how the typical founder maybe perceives QSBS, how much the folks that we end up talking with actually know about QSBS before we get engaged with them. I think we saw this as a really big gap. Founders don't know what QSBS is beyond the basics and certainly don't have a lot of resources for maximizing it. So yeah, that's what we're going to try and dive into in today's conversation. And I was talking with Nick offline just a little bit before this about sort of one of the things that we talk about often, which is kind of a guiding philosophy for us at QSBSrollover.com. And it's this idea that founders are really amazing capital allocators. And when we think about capital allocators in the context of taxes and tax mitigation and tax benefits, it's kind of either more money is going to the government, which we view as just fundamentally an inefficient capital allocator, or money could stay in the hands of founders who we believe are really great allocators of capital and move the ball forward. So, Nick, you've been a founder now for more than 5 years. How did you initially perceive QSBS? What did you know about it? And do you think of yourself as a good capital allocator?
Yes, a lot of founders are great capital allocators. They're just, you look at how much value has been created by them reinvesting back into their own businesses, investing into other businesses, founders. You could probably look at maybe like an index of founder-led businesses in the public markets, and I would imagine they have outperformed. And a lot of that has come on the back of how they allocate their capital. So as you mentioned, we met at Vint, and that was really my first foray into startups. And I actually remember when we set up the business, we started it as an LLC. We didn't file an 83 or our 8832 to elect C Corp status. We just did an LLC. This was just Google and myself figuring out the best structure. The time came to convert to a C Corp, which was about a year after we had started the LLC. That's when I was sort of alerted to QSBS was, hey, you should look into this. I think that was basically the advice that I was given, is you should look into this.
So you didn't set out initially when you created the LLC knowing that you would have to convert to a C Corp or that you would want to in the future? Or like, when did you know that hey, that's a structure that I'm going to need long term?
Yeah. I think it was when we started, I think it was when we actually had like a fully formed concept. We were around that time starting the kind of regulatory qualification process. It's like, okay, we have a concept here. Um, let's convert to a C corp. More so if we were to go and raise capital. We'd raised a little bit of capital at that point, but if we were going to raise more money, we wanted to be set up properly from a just a corporate governance perspective. So I had no clue what basis packing was back then, and not something that I took advantage of. But we did this C corp conversion, and the stock was issued to us as founders. And as I said, there wasn't extensive guidance provided because we had a corporate lawyer, but he's a lawyer for the corporation. He's not necessarily our personal tax counsel. So I was reading up about QSBS, and one of the most important things, I think actually probably the most important thing, was filing the 83B. So I remember filling that out, signing it, taking it to the post office to make sure it was sent via certified mail. Some article I read, just because that's the surest way that you can make sure that the IRS receives it. So I did that, and a lot of this not original QSBS knowledge was self-taught. First time founder. I was 22. I didn't have a CPA. I think I talked to my mom's CPA who had never heard of QSBS, and I actually remember like editing from the company side like a W-2 to make sure that this compensation was recognized in the W-2, because again, I read this online. You want it to show up somewhere. So I was like I think the W-2 had already been sent to whichever agency in the government gets sent W-2s, but I was like on their website, government website, editing my W-2 to show like $1 of like compensation.
Mm-hmm. Sure.
You set the par value of your stock at like 0.00001. So I remember doing that one evening to make sure that all possible agencies were aware of the issuance of this stock.
Yeah. It's sort of like a fumbling in the dark period for a lot of founders of like, this thing is super important. All the information about it is very distributed. Maybe different government websites, maybe a couple of law firms have some resources on it. But like, what do I actually do? And a lot of founders come to us asking that. And the somewhat tricky thing about QSBS is there's no QSBS form. Like you don't, check this box and okay, that makes your stock QSBS and just hold on to that document and you're good to go. It's actually can be ever evolving for founders. You could lose your status over time. You could be issued new stock and get status. So yeah, not a lot of great resources historically out there for helping people take advantage of QSBS, especially not plan for it in the early days.
Yeah, and even some of the like well-known startup lawyers who do a lot of the incorporation, may do conversion work, help with fundraising docs. They are far from experts in QSBS, and I actually found them to be like abundantly conservative. Where my first business was e-commerce business, and there was like a tech-enabled fintech platform, and they're like, well, we're not sure if this would be QSBS because there's a marketplace element. And then like QSBS is gray. Like there's industries that are clearly excluded, But when you read the private letter rulings that the Treasury has put out on historic businesses where QSBS status was questioned, you realize that if there's an element of your business that is tech enabled, they look pretty favorably upon that. So, they're always struggled with kind of the advisor piece related to QSBS.
Yeah, I've said a couple of times on this podcast, and I talk to folks all the time about this sort of moment of realizing that there may be 100 or fewer advisors who really understand QSBS in the States. And even though it's one of the biggest tax incentives in the US, it's probably one of the most under-resourced. And, real estate, for instance, a ton of great tax benefits if you're a real estate investor, capital allocator there. And there are so many resources and people who will guide you through executing tax advantage real estate transactions. And apart from the couple of attorneys who, some of them we've had on our podcast, and a few CPAs, there's no one really doing that for QSBS, and no one advertising sort of, we can help you navigate these waters, which is, I think, one of the insights that we had when we launched QSBS Rollover a couple of years ago.
Yeah, it's tricky, and it is so big. It was tough to actually quantify QSBS until maybe 4-6 months ago, when the Treasury put out the report on QSBS showing from, I believe it was maybe 2012 to 2023, there was about $30 billion a year of sort of QSBS taken, with that kind of topping out in 2021. That was a bubbly time in the venture space. But 2021, I believe it was $51 billion worth of QSBS taken, which is large. That's large. You can maybe comp that against just one piece of the tax advantage real estate market. The 1031 exchange market is, I've seen figures roughly $100 billion a year in 1031 exchanges, and you have so much infrastructure around it. All of the big wirehouses have platforms enabling 1031 exchanges. So, I would just reiterate how, I guess, underserved QSBS is from an advice perspective.
Yeah, and we kind of ran into this head on in our last business when we were talking with a family office, and they've mentioned to us, hey, we've got QSBS stock and our LPs haven't held it for 5 years. And so what do we do? And that's when we learned about QSBS rollovers, which was something that I had never heard about. We had actually really started talking about QSBS just a few months before that, and had not yet run into what rollovers were. And it's funny you mentioned 1031 exchanges. QSBS rollovers are kind of like the 1031 exchange for private stock, right? And so there was this problem where the family office had held QSBS for only like 3 years, and they needed a way to bridge the gap to 5 years and expand and maximize the benefit. And that was really fascinating, because when we tried to learn more about it, there was almost absolutely nothing about QSBS rollovers. I remember I ran like a rudimentary Google search of just like 1045 rollover, which is the section of the code related to this, or I ran searches for QSBS rollover, and the combined hits on Google were like less than 1,000 searches, which is absolutely minuscule on the internet. And so there really was nothing at all helping people to get to QSBS eligibility if they hadn't met the holding period requirement.
Yes. I remember when you did that search, I think it was like even less than 500. I remember like 250 or something in terms of resources on QSBS rollovers. I think it was like QSBS had maybe 10x the the hits, and then it's like
Yep.
Startup stock sale has 100x the hits, but really niching down into QSBS rollovers. It is, it's funny how things work. You have conversations and somebody says,
Yep.
"Oh, I'm struggling with this problem," and
I think for every 15 founders we talked to who had this problem, we had another advisor in the space who said they knew a lot about QSBS telling us it wasn't that big of a problem. And so that was also another learning, was like, hey, no one sells their stock before 5 years. Startups take a long time for there to be liquidity events. And you realize when you zoom out and you think about every opportunity for liquidity, that is like secondary stock sales. Maybe the founder selling some stock during a fundraise, like a Series A or B, which we see a ton right now, especially in AI and machine learning. And then exits, obviously, which we see that. But there are many liquidity events before 5 years. And that was a big light bulb moment for me, is that, hey, this is a problem that many founders don't even know they have, actually, until it comes right up on them. And our traditional advisors in this space, the very few that are out there, think it's a much smaller problem than it really is.
yes, and I would actually say it is a small problem. Maybe we compare this to other industries or other problems. This is a small problem. Thousands of people, maybe over 10,000 if we really expand what we are looking at, which I'd say a lot of what we are looking at is always venture-backed startups. So but it's a problem where it's in the thousands of people who have this problem, and you could maybe compare that to the tens of thousands, hundreds of thousands of startup founders or small business operators who might have a different problem where every single one of them could set up trusts, as an example. So like that market maybe 10, 100, maybe more times bigger than rollovers.
This problem always a very big problem when it does come up, though, which is the interesting piece.
Yeah, that's the thing, is that it is a big problem. And it's also an urgent problem. A lot of times when we're talking to founders, they may have this problem that they need a solution within 30 days for it. So I think the urgency combined with the magnitude of the problem, and despite it being a small market, makes it an interesting problem.
A lot of founders we talk to, as I kind of mentioned, are maybe raising, just say, a Series B, and they have an opportunity to take some money off the table. So for a lot of these founders, maybe they're raising money, it's year 3 or 4 into their business, and so they haven't hit QSBS. They're maybe getting their first bit of liquidity from their founder journey. So this is like the first time $3 million is being wired to their bank accounts. Like, kind of incredible. Your business is probably growing like a rocket ship if you're in that stage of fundraising. And so there's a lot going on. And if you're alerted to, hey, there's an opportunity, if you use a QSBS rollover, to put, say, $1 million back in your pocket, that's definitely something to look into, but not something that founder is probably ready to drop everything and figure out, what do we do? I think we run into that a lot, where a founder wants to do a QSBS rollover, but they don't have the time, resources, bandwidth to actually execute on one that they feel comfortable with.
Yes, everybody that we talk to is very busy. They're very busy. They're running businesses that are worth hundreds of millions of dollars, billions of dollars. So I would say their time is quite valuable. So going and diving into Section 1202, Section 1045 of the tax code is typically not very high up on their priority list. They may have seen a LinkedIn post about a QSBS rollover, did a quick Google search and read one of our articles, or like a Frost Brown Todd article on QSBS. But as we have talked about, it's a very nuanced topic where it takes a lot of time to understand the ins, the outs, the art, the science of QSBS. So yeah, I think we have used this analogy when it comes to QSBS many times in the past. Is we like to be the point guard for people when they come to us, whether it's at the Series B, where they're taking a $3 million secondary, or it's at the seed round and they're trying to figure out if they had set everything up properly at the beginning, or maybe they're looking to set up some trusts. We've been fortunate to build relationships with some of the best lawyers, trust and estate lawyers, QSBS lawyers, other startup platforms helping on the trust side. So being that point guard, whether or not somebody needs a rollover, I mean, we've seen it. We meet founders when they raise the A and then the B comes around and they need a rollover. We just like being helpful.
Yeah, occasionally we get the founder who has carved out a couple hours late at night to dig deep on QSBS. And a lot of those folks have actually even done some thinking about, hey, if I did a rollover, what could I do? And so sometimes we get to have these conversations with really well-informed founders about what options might exist. Some of those that sort of come up in conversation are, okay, it looks like I can make an angel investment in someone's company, and that could be a way to roll my money over and continue the holding period clock. The other way is, I guess I could start my own thing, but I'm running a business right now that's taking a lot of my time. What would that look like, and how serious would I need to take that new venture? So those are really cool conversations when we can kind of walk through the rollover options with a founder who's really done their homework. And I think that's when our value proposition in terms of, hey, how can we help make this process like beneficial and really easy and seamless for you? That's where I get most excited about, talking through, I guess, our services and where we've positioned ourselves.
Yes. There are options. Whenever we talk to people, pretty clearly outline when it comes to you selling before year 5, whether it's secondary or a total exit, here's what's out there in terms of rollovers. The angel investing piece, it's nice, it's interesting. I wouldn't say like scales very well. Say it's a founder who is taking $3 or $5 million off the table. That would most likely need to be a series of angel investments. Just given, kind of average check size and making sure, they're, I guess, diversifying, or if they're looking later stage, the $75 million, $50 million gross asset cap. We always have looked at angel investing as an option, but not necessarily solving all of the problems related to QSBS rollovers. It's just risky. It's illiquid. So, for us, when we learned about the QSBS rollover concept, and we did our exceptionally deep dive, I mean, we explored many different rollover solutions to figure out what can really help founders in the best way who have this problem.
Yeah, ultimately, I think company building rose to the top in terms of a good answer to that question. That is, the founder taking the money, starting a new business, and having sort of complete control over that business, its finances, its trajectory. But the obvious question that comes up is like, okay, how am I supposed to run a new startup with this rollover money if I'm running a Series B AI company? The answer is, well, you probably can't. And so it sort of changed the set of questions that we were asking from, hey, what are the options, to, okay, looking at the best option, maybe, which for a lot of people is starting their own business. How do we help make that process less cumbersome and intrusive on, the original business that they're actually running, maybe their current startup? I really like the idea of thinking of QSBSrollover.com as somewhat of a startup incubator or startup studio, where we help founders build that new venture and maintain their QSBS eligibility. We've gotten really good feedback because we're talking to builders. Like, they do want to keep building. They want to keep money moving and be allocators. And yeah, I've started thinking more and more about our business in that way, as like helping founders allocate capital to cool projects.
Yes, the startup studio concept is interesting, and providing these people with the resources to take a new business from 0 to 1, really from ideation all the way to product and market and turning revenue on. Again, these people's our clients, their time is scarce, their time is valuable. So I would imagine they're creating exceptionally large amounts of value through their day job, and say, it's a $2 million secondary. The math to spend 40 hours a week on a new project just isn't there. It isn't there, but that's why I think the providing them with resources and really helping take that new co from 0 to 1 is where we've had pretty tremendous success.
Yeah, we founders have a ton of ideas rattling around in their heads. Some of them are ideas of a new company that could run adjacent to their current business and solve a problem that they've actually faced in their day-to-day. And other times we work with founders who are interested in turning maybe a hobby or like a pet project into something more. All of those are the types of businesses that we've seen founders create as part of their QSBS rollover. And I think we've developed a pretty good process now for being able to come alongside those founders and maximize the opportunity that they have, which is take this money, this rollover money that can really benefit from being put into a new project, and using it to kind of wander in the woods and explore what that new business could be. We've started some really cool projects that are nowhere near the founder's current business in terms of sector or type, and it's really cool to see founders get excited about new projects and also benefit, hopefully, from the QSBS exclusion in the long term.
Yes, I think passion projects are great. Kind of creating cash flowing side projects would be another example.
Mm-hmm.
Maybe looking at acquisition opportunities for other small businesses. All of those, I think we've developed great processes and technology to kind of get any of those options from 0 to 1, whether it's in the sailing industry or sort of industrials or software. Yeah, it's pretty exciting what we have been able to build.
And I think the one of the conversations we have with almost every founder is we start talking about what it could look like to build a new business. And the founder says, okay, well, wait, so this could actually be something that generates cash for me, and we could really scale this thing. And the answer to that is, yeah, when you start a new business through a rollover, you can't just put your money in a company and let it sit there and kind of do nothing. And so the reason why a founder would work with us is because we can come alongside them and provide all of the resources and process and know how to help them get that idea out of their head and into the world in a way that like maybe creates some really interesting long-term value. Our founders steer the ship, but we love to take a lot of the day-to-day process off their hands so they can keep building in their current business. So yeah, these are very, very, very real, very cool businesses that we hope will become a major part of our of our founders day to day, long term.
Yeah, one of the really funny things is, people have been doing rollovers in the past, and
Yeah,
I remember a few years ago when we were learning about what the rollover options were out there. People use the word dummy C corp. That was what an advisor. That is what a lawyer said.
yeah, right.
They do dummy C corps where they set up a new corporation and it does activities, and that's it. Because that's one of the problems that we've seen in the space is just this this principal agent problem. Like a lawyer who's helping founders do a rollover, what are they really doing? They're just creating a C corp, and they'll doing the same thing Stripe Atlas charges founders $500 for, $5,000 to $10,000. That's what they're doing. It's like, okay, send me the documents when you wire the money into this new C corp. And when that's all that they're doing and how they're, I guess, monetizing, the dummy C corp is fine. And we looked at that as like, that just doesn't, it's not defensible. Sure, it can be done. It can be done, but what's actually defensible? Like building a new startup, and doing customer discovery, building a product, building a wait list, emailing that wait list, launching a product, turning on revenue, like something like that. And the fact that people talk about dummy C corps as an option is sort of, I think it's crazy. Yeah, I'll say like with technology today, certainly made taking a business from 0 to 1 pretty accessible, and we leverage a lot of that to bring these businesses to a point where they are making revenue, and yeah, just the fact that dummy C corps were sort of suggested as an option. It's like, well, just a real business is, I think, a pretty interesting way to approach the rollover problem.
Yeah, and again, that goes back to our belief that founders are the best capital allocators. Like founders want to see the ideas that are ping-ponging around their head out in the real world creating value. That's ultimately what founders are about. That's why you leave your 9 to 5 and you start a company. Is because you want to see ideas unleashed. And that's the most fun part about what we do now, I think, is helping founders get those ideas into the real world. The fact that we're building a luxury fashion business and industrials like tech business at the same time, within our firm with different founders is super cool. Something I didn't think that we'd get to work on.
That is the coolest and most exciting thing. And for all of the founders out there, you know that when you are running a business, you end up getting so many insights just by kind of being in the game. As Chamath may put it, being in the arena. And being in the arena, you get these insights because you're doing things every day. You're having conversations every day. So as Brad Jacobs would put it, business is problems. Every day you're dealing with problems. So when you sort of have the founder brain, it's like, well, there could be a solution to this. My current business, it's worth $500 million. So maybe solving this small problem that I have isn't necessarily the best use of my my day job, my 9 to 9, but maybe this new cow could solve this problem and generate a bit of cash flow for me.
Yeah, so that's, I think, what we're excited about doing over the next many years, hopefully, is helping founders get ideas out of their head and into the real world and solve a very equally real tax problem, individual tax problem in QSBS. And so, whether you're a founder or an advisor, if you want to increase your knowledge about what QSBS is, or maybe even solve a problem that you're experiencing right now, Nick and I'd be happy to chat with you, and maybe we can get something out into the real world that you've been keeping in your head for a long time. That's what we want to do. Nick, thanks for humoring me, having the conversation, both from the founder's side and as a partner in this business. So let's keep building.
Yes, let's keep building. Thanks, Brady.
Thanks for listening to this episode of QSBS Solved. We hope to hear from you soon. Remember that the content shared on QSBS Solved is for informational purposes only and should not be construed as legal, tax, or investment advice. While we discuss strategies related to qualified small business stock, or QSBS, including rollover planning, listeners should consult their own tax, legal, and financial advisors before making any decisions. Laws and interpretations can change. Individual circumstances do vary.